Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 28th of June, 2016. This is another Trader Bite, early nourishment for your trading mind. I'm sure I'm coming across to you loud and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the overnight session and what's on the news, the key elements here. Draghi did come out and speak about monetary policy. He said monetary policy has inevitably created destabilizing spillovers. Opening comments from the ECB forum in Portugal. Also, we have a pretty decent bounce here in European stocks. Stock markets across Europe are higher by more than 2%, led by 3% gain in Spain's IBEX. China's Shanghai Composite came in at 0.6. And Australia's ASX is lagging. The S&P futures are up quite a bit. We're up about 20 some odd points. It looks like nice little bounce. The pound is also bouncing. It's up by 0.8% at a dollar 333. Let's turn down the news feed. Even though the UK was hit with two downgrades yesterday, the S&P cut the UK's AAA rating to AA, and Fitch lowered it from AA plus to AA. So that's what we've got. The market, I'll talk about it in a minute, and I mentioned it in real time yesterday in the S5 chat room that to caution shorts, it was about 10:37 Central, 11:37 Eastern, where I issued a caution shorts. The market did make a lower low at 1981.50 in the ES, but still, it had it definitely had the makings of a bounce. Here's what was expected yesterday. There we go. Not sure why the mosquito bite thing's on this feed, but so what was expected yesterday is an open auction out of range, an attempt higher, and then further a continued push down. The market ended up pushing lower than expected. I expected 1986 on the low side, 1986 being a key figure. Multiple daily highs and lows in that price, a monthly LVN, and a composite LVN all in one. So overall, we have the skew was downwards. The market's still moving away from value, and is still not establishing value at all. It's not establishing a price at which, at least yesterday, was not establishing a price at which buyers are stepping in to take the market up. So as long as the market has not found its buyers, it continues to auction lower. So, and then Hypo 2 was an open auction, a sell-off. Again, we're still advertising lower prices to spur buyers. That's the purpose of pricing lower, is to find the other side. And just absorb that for a minute. The market auctions lower to advertise lower prices to motivate buyers. Most people think of the market as selling off to sell off, or selling off as it continues to get more panic, or more panic and more selling occurs, but it continues to occur. Just think of Newton's laws of motion. An object in motion remains in motion, right? And the market's the same. It continues, trends continue until they find the opposing force. And the purpose of a trend, the market's mechanism for advertising down, its sole purpose is to find the opposing side. Remember, the market's not here to screw you out of your trade. It's not here to punish you for all your sins, to tell you that you're no good, or it's not a personal thing. You're not special to the market, okay? The market is here to find equilibrium consistently. That's what markets do. This is why we go to the flea market on weekends, or the farmers market. This is why we go to the shopping centers. It is a place that attracts buyers and brings sellers, and the purpose of it is trade. And so as long as the market cannot find prices, it advertises prices lower and cannot find those buyers, it'll continue to advertise lower. And in doing so, it doesn't do so in a linear way, it does it in a back and forth rotational way because different buyers step in at different prices as value is being perceived until we get to the point where enough participants, not big participants, not small participants, but enough participants come in and see prices as unable to auction lower and see an opportunity to jump in and buy bargain basement prices, and that's how we bounce. The best way to do this, I used to post this on Twitter a long time ago, maybe 2009 or something. The best way to see this is to watch a car or cattle auction. Just Google YouTube. On YouTube, do a search on a cattle auction, and you'll notice the same process takes place. As the steer comes in, a beginning price is put out there. That is our opening price. There are no participants initially because nobody wants to step in. As the auctioneer, because it's a one-way auction in that situation, there's only one cow that's being sold. Um, the auctioneer will start to look for the market by dropping prices, just bidding prices lower or offering prices lower, looking for a bid. As soon as the first bid is found, all of a sudden everybody's motivated to buy because the bottom is in. This is the process we went through yesterday. Um, this is the process we went through yesterday. We could not find that bottom very well, though. We did have a good opportunity to find it back here in the 1981.50. Once this rotation occurred here, I issued a caution shorts at 1037 or so. The market had all the pieces together using the underlying. It had all the pieces together, in my opinion, to start drifting upwards, and it held its own for a while. And then what it did is it ended up retesting that 1981.50, putting in a double bottom, a double TPO low. That's a double bottom, which is not what we want to see. However, the double bottom looks good with the taper. Look at that taper as prices went down. The market methodically dried up. And then overnight, it ended up retesting this 1981.50 again, and then we're currently trading 2008. They didn't make it easy. It's not as obvious. It's more obvious during the daytime, especially earlier in the day when we make a bounce like that. But yesterday, it definitely wasn't obvious. Let me back up a bit and just go over what we're expecting for the day. We're looking for we got our core PCE and so on. Those releases came in. GDP came in at 0.4% versus 0.6. Core PCE 2.0 versus 2.1. So slightly lighter. The GDP annualized came in at 1.1 versus 1%, so fairly strong for Q1. Personal consumption 1.5 versus 2.0. And then we also got Case-Shiller, which is a housing market index. Month on month came in at 0.45 versus 0.58. Year on year, stronger, 2.44 versus 5.41. Looking ahead, we have Richmond Fed at 9 Central, 10 Eastern, expecting 3, and Consumer Confidence Index at 9 Central, 10 Eastern, expecting 93.4. That's a half hour after the open. We're looking for consumer confidence. And then I don't see any speakers, significant speakers on the calendar. So once 9 Central, 10 Eastern passes, we are good to go on the numbers. So here's what things looked like on the overnight session. Volume is about twice the expected amount, or twice the common amount. For the session, expecting 180,000. We've got 374,000. So we expect volume to continue to be high into the open and into our session, into our day session. We have a P-shaped profile. This is a short covering profile. The market makes a quick move up and then starts to bounce as it finds equilibrium, which it has. The point of control at 2005 and a quarter with the high at 2011.75. Essentially, we've pushed all the way back up into yesterday's opening prices and have taken back all of yesterday's action. So if you've been around, you've probably noticed that every time the market drops, it ends up popping up real strong, no matter what the news. So if we go back to the right back here, this was the yellow on yellow. This was the announcement back in on the 24th of August that caused a massive move. It caused the market to trip its circuit breakers like we did last Friday um, on the S&P. And then what happens immediately afterwards is that the market just, without warning, kind of bounces up. So in this case, it bounced up, had a higher low, and then it took off. We did the same thing. We dropped even lower to break the yearly one time framing, bounce up, make a lower low to extend the move, to exhaust the move, and then we've had a rally since. And so just don't, my opinion here, and it's just an opinion, I'm not a long-term trader. My opinion here, don't sit on your shorts. It's really not it has not been profitable to take a short, make some decent money on it on the sell-off here once or twice a year, and then have to sit through the pain of the rally for the rest of the year. Just bank something, hedge it, put on an option, whatever you need to do. I've seen too many shorts just get in and hold on and get absolutely obliterated. So what we've done here is we have held the 1986 level. This is again a key level. I marked it in this thicker price and in red and maroon actually on the flex levels. This is a price where we expected a bounce and a push back up. 2042 becomes the target above. We are trading 10, 20, 11, so there's a lot of room there. We have a gap zone here that I'll mark in a minute. As soon as I get done with this trader bite, I'll add the gap zone, but I'm looking to infringe on the the gap zone today and to keep pushing higher. The first response today, the first hypothesis today is expected to be responsive. So we're opening up here. It may open just out of range or just inside of the range. I'm expecting an open auction. I'm expecting a reversion back. I'm looking for a test of 97.50 or so just to test out this double top right here. I'm looking for some support, and I'm looking for it to start bouncing back up and for us to push through the gap zone. I'm looking for the market to push to the upside. Barring news, all of that, you could throw all these hypotheses out as soon as some politicians open their mouth and says, whatever. The Netherlands are also having a referendum to leave the euro or something. That changes things quite a bit. So, but overall, I expect that the market will test, given the run up and the fact that the inventory overnight is positive. I expect the market to have a reversion, find a base, and then start to work its way back up. That's the primary hypothesis. This is the reason this is a primary hypothesis and not some, 30 other possibilities, is because this is this is the market, this is the auction process. This is a natural part of the auction process. Is once we gap up, we're looking to balance that inventory. We're looking to test to verify interest on the downside, looking for buyers, and then buyers step in, and it's likely to continue on its path. Again, the other thing I need to mark here, and if you don't have flex levels, you might want to draw a line here for this double bottom. This is technically a weak low, even though we had a pretty good taper on the profile. We don't have an excess down here, so this is a price that that has a pretty decent probability of being revisited. The secondary hypothesis is to open, flush out the last sellers, and then a push into the prior day's range last Friday's, and then start to move back towards 1986. In that situation, what happens is we're looking for buyers to step in to seek out sellers. Sellers step in as we approach Friday's prices, and the auction down resumes. And in this situation, 1986 becomes a target again. That would be hypo 2. Okay, so those are the hypotheses that I have for you. Um, it's again, it's as always, your job is not to sit here and predict the market, man. I've seen so many comments, just I'm sorry, but it's just absolute nonsense. Defending the short position, defending the long position. I strongly advise you to go and watch the video, this webinar I did for Futures IO. Go check this out. It's on my Twitter feed. Your mindset is so absolutely important to your performance. Do not get into a fixed mindset where you're defending your position or defending your stance on the market. It does not make money to defend whatever your hypothesis is. What makes money, in my experience and in my opinion, I've done this for 16 years now on a professional basis from day one. My experience is what makes money is whatever the market tells you. Your idea, your idea for today has to be aligned with the market. The market does not have to do what you say. That you can sit there and argue with all your friends and all of that stuff, but it's not going to make you money. You might walk away feeling good for the moment, but the fact is, when you have a fixed view of what the market should do because you have a position in the market that is in the direction that you're defending, you are absolutely cutting yourself. You are trading drunk. You are cutting yourself from your ability to see the opposite signals, the danger. Okay? So keep an open mind. Yes, we all want every trade to work. Yes, we all want to avoid losses. Nobody likes to take losses, but they're part of the plan. They're part of the game. They're part of the probabilities. My expectancy would be crazy high if I didn't take losses. Losses humble me, just like last Friday's loss, fighting that sell-off on the on the close into the weekend. Terrible. Just defending an idea instead of being in alignment with the market. It's just something you need to be keenly aware of. So that's my I didn't intend for this to turn into a trader wisdom session, but it's really important to sit here to sit here and just listen to what the market says. If you're not in alignment with the market, it's okay. It's just one trade. Don't let it wipe away your account. And if you find yourself defending your positions, arguing with others, telling everybody to get short because it's going to drop and Yellen's going to, whatever, it's nonsense. Just trade what's in front of you. Please, just trade what's in front of you. Many, many, many egos have come and gone in this business, and it's just the market chews through those people very, very quickly, and you see them come and go. So just watch what the market's doing. Follow the auction, follow your indicator, follow your homework, whatever you're doing. Just follow that as opposed to following your ego and boosting it and trying to feel like you're a superstar. Being a superstar in your mind doesn't make money, and it doesn't provide you with the journey that you want and the success you're looking for. Good luck.